Hello everyone. Let me see what are the factors should be considered in determining the capital structure of a company. The factor is of two types. One is the internal factor and another one is the external factor. Let me see the internal and external factors in detail. First one is the internal factor, nature of business. We may say that the nature of the business is one of the important factor that will definitely affect the capital structure. So here, if a business having a stability in earnings, if the business enterprise having the stability in their earnings, they can raise their funds through the debentures or through the preference shares. So this is possible only this is possible in the public utility concerns. Next one is the size of the company. Here we see the companies may be small in size and also in the long in size. If the company is small in size, it find difficult to obtain the long-term debt. So if the company is in long size, the company is investing the heavy amounts or huge bulk of investments, these companies can considered as less risky by the investors. So they have the eligibility or they can raise the different type of securities and collect the funds from different sources. So collecting funds from different sources and issuing different type of securities is possible only in the large companies, and it is not possible in the small size companies. Now let me see the regularity of income. So if a company needs a regular income in future, the company may issue the debentures and bonds. If they are preferred to issue the preference shares, mean the company cannot get their income regularly. So it is advised to need income means they have to issue debentures and bonds. The next one is purpose of financing. So the purpose of financing also affect our capital structure. How it means, there are two type of purpose. The one is the productive purpose and another one is the non-productive purpose. The best example for productive purpose is purchase of machinery. If we are purchasing some machinery, for that we are in need of some funds, mean we can definitely raise our funds by issue of debentures. On the other hand, we can say if we need to we are in need of for a non-productive purpose, means the company can raise the funds by issue of equity shares. They cannot issue the debentures. Next one is period of finance. So here the period of finance will also affect the determination of capital structure. How it means, the funds, if the company is in need of fund for 3 to 10 years, means they can issue the debentures. They can raise their funds by issue of debentures. If they are required funds for more or less permanently, means they cannot raise their funds by issue of debentures. They can go to the issue of equity shares only. The next one is development and expansion plans. So while framing our capital structure, what we have to do is we have to consider our future also, our future plans or our expansion programs in futures. What are the idea we are having? We have to keep it in mind. After that, we have to frame our capital structure. While planning this, if suppose we are issuing all the securities in one installment, means it is we cannot keep anything for our future. So it is better we have to, instead of issuing all in one installment, we have to issue the securities by in the last procedure, or we have to take some other aspects to save some of the earnings for the expansion plans. Next one is the attitude of management. Here we can say our capital structure, one of the factor is the attitude of management. So definitely the age, experience and ambition of the management will definitely influence in their attitude. So we can say the management who are all in the decision making places, they must be very effective, experience, and they must be very motivative, and they must willing to employ their debt capital also. So thus the capital structure will influenced by the attitude of the management. Here comes the trading on equity. Here we see that company is issuing the or the company earns a profit the company earns a profit from capital, both whether it may be owned capital or it may be borrowed capital. If it is a borrowed capital, the borrowed capital also include the preference shares. So the preference shares of the company can also be included in the borrowed capital. For that, we have to pay interest or dividend, whatever it may be, in a fixed rate. If the rate of the fixed rate is lower, if the fixed rate is lower than the general rate of earnings of the company, the ordinary shareholders will have a greater profit, or they having the additional advantages of earning additional profit. So, if the company employed the borrowed capital, including the preference share capital, to increase the rate of return on equity, it is to be trading on equity. So, instead of giving fixed rate of dividend or interest to the borrowed capital on preference share capital, we can issue including preference share capital, increase the rate of return on equity shares. So instead of preference share capital, we are going to increase the rate of return on equity share capital. While we are increasing the rate of return of equity share capital, it is said to be the trading on equity. Now, let me see what are the external factors. Here comes the requirements of investors. So, here we can say the shares and debentures should be issued only according to the taste of the customers, or according to the preference of the all type of customers. The customers may be of different types. If one type of customers, they show their interest on investments, security of investments and stability of income, and some other customers may show their interest on higher income and capital appreciation. So, in order to, if the company wants to collect from funds from different category of investors, then the company have to issue appropriate issue of different categories of securities. They have to issue different categories of securities, so that only they can attract all the categories of investors. So the company cannot itself issue all the shares or debentures. They have to consider the taste and preference of all type of customers. We can say the condition of capital market is one of the important external factors which will definitely influence on the capital structure of the company, because the investor is very often influenced by the sentiments and their moods of the capital market. So the fluctuations in the capital market will influence on the capital structure. The next one is cost of capital. So this cost of capital is an important aspect that determines the capital structure. So here we see the company can borrow their capital funds. They can raise their capital funds by borrowing. They have to borrow they have to make their borrowings when the rate of interest is low. When they have to what they have to do is they have to borrow the capital funds when the rate of interest is low, and they issue the equity shares when the rate of earnings and share prices are high. They have to follow two tactics. One is when the interest rate is low, they can raise their capital funds by borrowing, and also they can issue equity shares when the rate of earnings and share prices are high. Next one is the legal requirements. Here the management is anyhow they have to follow the legal requirements. So in the issue of a different type of securities, they cannot go beyond the country's legal requirements. Next one is government policy. We can say the government policy is one of the important factor which influence the capital structure at the time of planning. There is a change in lending policies of financial institutions, and also they have to compete the changes in the financial pattern also. If there is we have planned a financial pattern. After that, if there is a changes in the government policy, means the company will face some difficulties in cope up that financial patterns. So here the monetary and fiscal policies of the government also affect the capital structure decision. So we can say that the government policy will definitely affect the capital structure, and that will determine the capital structure of a company.